Well, it's ThinkorSwim Lab time. Let's go, my Mavericks. It's Joe with you here again. Price slices is the topic for today. This is something that I should use more. There are 5 or 6 different ways to do everything in this software, which is great. But the price slices is something that it'd be kind of neat to actually set up and have, and you can reference back to it. It's just another place to look at some of the things you're breaking down when it comes to the stock chart and combining up the options position. So I wanted to spend a couple of minutes here, do the overview of the price slices, a breakdown of the available studies. You can switch these up to anything you really want to. You can also switch up the columns to give us different information depending on the type of trader you are. Different ways to use slices, exits and entries and targets. It just depends on what you want it for. We're probably going to get specific to exits and targets for this class, just for examples. But the real cool thing about this, I'm going to correlate it between the stock chart and the option position that we're going to analyze. What's really neat about that is a lot of my traders will use Fibonacci retracements and extensions, Bollinger Bands, Elliott Waves, and they give you all sorts of cool numbers and different things to take a look at for exits and targets and things of that nature in management. We can just take that directly into the Analyze tab of the options combo or the option that we're looking for and manipulate those price slices to give us the same values. So we can bounce back between the stock chart and the option analyzer. It's kind of nice to have them in both places. So let's jump into the software, guys, and we'll get into it. Well, the first thing I'm going to make mention of, folks, is that I don't work for ThinkorSwim. You probably know this by now with all the videos we've done. I'm doing this for my Mavericks. Something that I found, something that I thought could be helpful. And here's the funny point. You probably already know it, and if not, you probably know something better. There's the disclaimer. Let's get into the fun. Now, I wanted an example, and Microsoft is actually a pretty good setup to the bear side here. Let's do a quick breakdown without getting too involved. I can see a little bit of a pivot point here off of a falling 200-day moving average. Looks like it almost set another one. Well, it did, right through the consolidation area here. And then it just has recently fallen off of a pretty good pivot point, where I like to call it a little bit of a kind of a kiss of death or the kiss goodbye, because it's coming back up to a descending 20 and 50, and they're crossing over as it falls and it rolls over, and it did gap down quite a bit. Now, the main thing for me is going to be this neckline. That's kind of my line in the sand. This is where I want to enter. So you can see that Microsoft is actually triggering today. And for you guys who want to nerd out a little bit more, that is a descending triangle pattern confirming to the downside. So I got to figure out what trades I want to do. Diagonal spread, definitely puts, diagonal put spread, maybe a straight put, bear put spread, bear call spread if I want to go credit, targeted butterfly. There's a bunch of things I can do. However, I want to see, and this is what most of my traders do. We said this earlier in my introduction that they like to use Fibonacci extensions, Fibonacci retracements, maybe trend lines, Elliott waves, all sorts of things to calculate it. So I'm going to start with the simplest, and I think it's one that a lot of people are used to. Plus, ThinkorSwim has a really cool tool. I'm going to go down here to the cursor, pop it up, and go to my Fibonacci extensions. Now, what's really cool about these, they'll take into consideration, I'm just going to click up here to this last pivot high before the most recent. Drop down to that pivot low. I'm just going to click once, and now you can see that the values are there. And I'll drag these bad boys all the way up until I get to the previous pivot. Now, I'm just going to drop that here. You could zoom in on that, guys, and get as specific as you want. For this example, in my personal trading, I'm pretty gray. I'm pretty loose when it comes to a couple of cents here and there. It doesn't matter. Options trading is gray anyways. So what am I looking for? Well, the first thing I'm looking for is 100% of the move to the extended side. And you can see we're already around the 78% at 245. That's where the stock's currently at. Looks like we got a target here about, I'm going to call that 240. So we got about $5 to the downside. That might only take 1 or 2 days. So this is a trade that I would look at 2 weeks out. No. 1 week out, a week and a half out at most, maybe a half a week. Something really short, sweet. This is where the vertical spreads are nice, or even straight puts. However, what I like to do, what I really want to do, I should say, is the 161.8%. So the continuation of a move, about a standard deviation away from the previous retracement. Yes, I want to bite off a little bit more fat and chew on it for about 4 weeks, 3 weeks, something where the markets could continue. So the 220 mark is also a pretty good idea. Right. What does that mean? Well, that means we're just going to continue with stuff you already know. I got to go out there and I got to find a trade that fits the situation. So I'm just going to go over to Analyze here. I get to the tab. There it is. And let's go over to some simulator trades and let's take a look at what Microsoft has to offer. I chose this example because I knew this would have it. We've got 1 day out expiration. I don't think we're going to make much there. I know we could be pretty aggressive, but 1 day is not going to really do much for us as far as selling. I'm thinking more of a diagonal spread here. So 8 days out, 15 days, 22. Okay, I like the 8 day. Let's start there. I'm going to look for what 8 day has to sell. Right, I'm looking for that. Now here's my strike prices. 240 was for the shorter term. I could go out to more, and you'll see here that if I get to the 220, it's not worth much at all. So I know that if I'm going to do that extended or that deviated target, one deviation, I'm going to need to sell a lot longer term. So let's just wipe that out for now, and we'll start with the shorter term trade. So I'm going to go ahead and sell the 240. That's pretty much that first target. I just hover my mouse over it to where it says sell on the bid, and you can see it populates it down here. Let's go. I like to go 2 weeks apart. I don't like to sell 15 days if I'm doing 8. I'll go 22. I might even go 29 if it's something that I think I'm willing to roll. Let's say that it hits it in 8 days and still looks good, then I'm already into a nice healthy put that's made some money that still has time. So if you want to go further and further and further in your back leg, I'm totally fine with that. This is going to be bang for the buck, in and out, so I don't want to go too much further than 2 weeks apart. So I'm going to get this 22. Yeah, you guys are getting a whole lot of information on my ideology of trading. You're welcome. So I know it's at 245. That is going to be great because it's right at the money. So I'm just going to hover this over. Hold down Control. Click it. So down at the bottom here, you guys can see I get this nice diagonal spread. However, I don't like to start with 10 contracts. I'm going to drop this bad boy down to 1. Okay, $4.29. It's pretty expensive. It's doable. But let's see what it's looking like on the risk profile. Now, I've cut some corners, and this is my default setting. I like to see 3 day steps, right? And I like to step them apart by whatever it is from the expiration cycle backward. And what I mean by that is I want this peak. Now you can see that if I did 2 days apart, I don't get that peak. And if I go 4 days apart, one of them expires and I get that slope. So it's just basically creative math of how many days lines do you want to see, 1, 2, 3, or 4, and then how many steps do you want between each line. I have a class on it. You guys can refer to it if you'd like. So I've got it already built, and here it is. Totally easy. Now let's get to the topic. Price slices. Down here on the bottom there, it defaults to plus 10%, minus 10% from the current price. They're all unlocked. You can see here. So as the stock moves higher and lower, so will all these. They'll just shift up and down based on where they're going. So the first thing I'm going to do is start with just an idea, an example. If you go down to the price slices, first let's get a breakdown of what they're going to give us as far as the columns. We've got delta, gamma, theta, vega, and then we got a profit loss for the day and since open. If you lock this price and you let it sit day after day after day, this will change differently than that. Kind of cool, right? So it will keep track of it as this is your price and the days that you do it. So if you're into the delta, if you're a gamma guy, if you're a theta person, if you're a vega, you can put these values in here and any sort of slices you want, and it'll tell you what the behavior should be at these levels. Whether they're a percentage, whether they're a dollar amount, or I'm going to show you one that I like that ThinkorSwim gives is EPR. It's estimated price range. It's really cool. It's going to give you the values of these as they change. Kind of nice. Now, if you right-click anywhere in here, you can add a price slice, and you can see it will always drop on the bottom. And once you start doing a lot of these, folks, and you want to add more, you might lose track of them. Just make sure that if you add a price slice, you remember it drops it at the bottom. If you want to delete it, just hover over, go to delete. If ever you get lost and you do a whole bunch of things, you could just go to reset. It'll knock out all the lines you've built, everything else, and it'll come back to these 3. I can give you another example of that maybe here later on. So here we are. But we want to talk about our targets. So let's go back to the chart. And you can see that our first target was 240. You can see our extended target was 220. So let's just throw them up there. I'm going to go back to analyze here. And what's really neat about this, I'm going to leave these plus 10%, minus 10%, and the 0. I'm just going to add a slice. I'm going to add 2. There. Or at the bottom. Now what's neat, it's very easy to increase price. You could either grab the new slice and drag it up or down, or what I find to be a little easier is just type in the value. So the first one was 240. I'll hit enter, and immediately locks itself out and gives us no more value here through the offset because it's just price. However, it will give us these values. You can see that the 240 popped up exactly where our expiration cycle is. Well, why is that? Well, because that's the strike price that I sold. So 240 would be ideal for this trade in front of us. Now our extended target, let's put that up there too. I'm just going to use this one I just added here. Type in, what was it, 220? Hit enter. Is a little further down the road. And you can see how close is it to a 10% drop. 10% drop is $2 or $220.80, and we're at 220. So our extended target, that deviation, is about 10% from where we drew our Fibo. Isn't that fun? This is where you can just nerd out, right? So I could keep that up there or just realize that my extended target's about 10% past what the entry point would be. Now we just look at the values. You could put your cursor up here. 240 would be ideal, right around expiration cycle, 8 days out. However, let's say it really falls apart and we're playing around the 220 mark. Remember this box here to the left, right, guys? I have my day steps and my step width, and this will give us a hypothetical at expiration all the way to 3 days from now. Okay, so there's your first idea of how this works. If I right-click onto this and I go to Reset Slices, let's say I want to get back with that stuff. There it is. It just goes back to the 10%, minus 10%. Let's get into some of these really cool this stuff that this has, right? These are really cool options. So row count, it'll give you, here's just a default click, it'll give you 11 of them. This will give you 5, this will give you 3, and this is just extra slices for you to play with. So if you know that, hey, I like to do 5 and I want to do certain setups above and below the current price. Keeping that in mind, you also have set slices. This is what ThinkorSwim gives us automatically. Plus minus 15% off of the base, 10% SPX beta test, uniform stress test, which is going to be, I think, 12% values up and down. 7 rows, 5% each. 8 rows, 2%. So it gets really fun. You can build all these, but sometimes, especially for you guys who like to do the standard deviations, they're already here for you. Here's that EPR, the expected price range, and 15%. We could play with that. But I'm going to show you something a little different. Now we have break-even slices. I was kind of bummed because you can only do these one at a time. It'd be neat if I could select them all. But if you really want to quickly say, hey, what's my break-even 3 days before expiration? You click it, and it'll just give you that slice. But notice it got rid of all of our other slices. So it's kind of this all or none thing. So just come back here. I'm going to hit Reset Slices. Okay, so that's a great way to do this. The last thing I'm going to show you, and I'm going to build something first before I do it, and this is neat, slices to charts. Once you build what you want to see, let's say we come up with our target. We come up with our protective stop. We have our standard deviation set, or in this case, I'm going to use the estimated price range. And you want to see them on the chart without having to come into the option. This is where you put it. Now you can do it side by side. You can have 3 charts up. I like to just do it on the chart that I'm looking at. And I'll get there once we get some of these slices drawn. All right. So let's move over to this same strategy. Right? I'm going to do the longer one here in a second just to show you. But let's go to this and let's switch these percentages to expected price range. Now this is going to have an offset of 0.5 increments. So I'm going to do the tightest, which is 0.5. This is to the upside. I'm going to go to this expected price range. I'm going to do this thing 0.5 to the downside. Now it's giving us this value. So if you want to know what they are, and this is one thing that I thought was really cool, is now that that's set, all I have to do is switch this to dollar amount. And now it says that's saying that's a $20.05 expected price range. It's going to be up at that area. Or 8.16% is the expected price range to the upside. Now it's going to be cool because it's going to be slightly off from the downside, both the up and the downside. A lot of that has to do with probably the interest of buying versus selling and all that other stuff, put call ratios. I'm not sure how they calculate it, but it's sweet. This says it's a 21.85 cent move to the downside, or 8.9%, so a little bit more risk to the downside with the expected price range that TOS is giving us. Isn't that neat? Okay, so let's say that, okay, that's great. We could run the same calculations. Well, let me go ahead and just take what ThinkorSwim thinks and put it on the chart. So what I do is I make sure that I get all the slices on. Sometimes if I right-click here and go to put on the chart, it doesn't give me all of them. So I go all the way over to this button, just click on it, and go slices to chart. I'm just going to put it on my, make sure I get this right, slices to charts, and I just want my chart. And okay, let me get rid of my Fibos because you will see it. You could probably already see the lines. There you go. Right here. So now what's cool is we could do the chicken before the egg kind of an analogy. You could see that that extended target to the downside side is right here, 223. I think I had a target of 220. Well, 223, if that's closer, I could probably sell the 225 and make a little bit more money. And then it says if it goes against me, for you guys who use stop orders, yeah, that 220, 265.49 might be a great place to put your stop at, because that's the expected price range if this thing bounces. You could also use something like the previous pivot high, put a slice there, and work your magic going forward. So let's keep going with this example because you guys might know the slices as probably better than I do. But what I like is how do I use those slices to better my position. So in this case, I might just go back to, well, let's see what we have if I can sell to something a little further out. What did it say? 220. Ooh, 237.5. Okay. 232.5. So we're getting a little further out. However, that's more expensive, isn't it? So I'm going to have to do this longer term. So I'm going to move this from the 17th to, let's try the 14th. And it does offer a 232.5. Still $7. But what if we investigated something that would take advantage of that move to 223? We'll call it 225, right? Where this price slice is. If we're going to go a little bit longer in target, we need to go longer in time. Now, it's interesting because I'm only a couple of weeks apart between the 7th of October and the 23rd of September. I've actually just got 2 weeks between the two. But I'm going to need more than a week, and I don't like to be a week apart from strikes. So how about the 2 weeks, which means we're going to change this bad boy into a vertical spread. So let's go ahead and knock these both to the 7th. And instead of our 240 target, I'm going to extend this out since we're going to take advantage of this to 225, right? Or this very close to that EPR to the downside. So I'm going to have to day step this bad boy around to where it fits about right here. I can play with it more, but I won't. So you can see all of a sudden now we have different values. We could take a look at it here. Okay, this is where we're at. If it was to get there in the current day, I'm just referencing this box down here to the left. All of our values are there, and we could add slices too. We could say, okay, well, if you wanted to, we could right-click and just reset everything and say, what's break even? All right, let's go to break even on the 26th. Okay, well, there it is. So this thing has to be right around the 248 level, 243. My eyes are kind of bad here, guys. But yeah, you can see this is right where we're at on that date. So let's go reset this thing to all the basic slices. This is what it looks up, down 10% from current. Kind of funny because it's real close. It's a little deeper than the 225 that we're looking at with the EPR. Let me go ahead and put that back. I'm going to switch this percentage to it. I'm going to offset it by that negative 0.5. And boom, right back to it. Now you can open these up, and they're almost kind of a standard deviation for whatever this value that ThinkorSwim uses. This went off the chart, so I had to scroll over. You can see it jumped all the way down to just 208 there. So it's kind of cool. Last thing I'm going to do, what I already did, I guess I already put it, slices to chart. Boom. And then we go back to it, and they're already there. One thing I will add Once you put them to the chart, they're just kind of there. So if you manipulate things, you want to delete these first. So delete them off the chart because these won't move. These are going to be the ones that we set. So it's pretty easy to do. You just kind of click on it. You can hit the delete. That's all I do. I just make it so it's blue. Hit the delete there. And then if I go back to my analyze and I decide to change these, let's go ahead and just kind of reset them. And then right click or click up on here and say slices the chart, puts them back on. So this just takes time. It's just time behind it, playing with it, but it's kind of cool. You guys could figure out what you want to do with what trades you want to use, where you could expect it. I did the Fibonacci extensions. We also took a look at just going to the trade itself, right? I said the chicken before the egg, but this one's the egg before the chicken, right? Setting this EPR is actually kind of fun. Play with that. And for you guys with standard deviations, you can play with this. These two things are really good with condors. All right, that's it. I went a little longer than I should, but this is, you could see, I just want to give you an overview. Maybe you use it, maybe you don't, but maybe you didn't even know it was there. So it's kind of a fun thing to play with. Just go out there and mess with it. Thanks for joining me, guys. We'll talk to you next time. Bye, everyone.